Hello, my name's Brad Teal and this is our March 2017 market snapshot to give you some guidance as to the performance of the marketplace and what we can see going forward. That what we see in the figures from CoreLogic is the fact that there has been continuation of property growth in the capital cities around Australia. We see that Canberra at 3.5% is the number one city for growth last month. Sydney once again up there, and Melbourne at 1.5%. Hobart was the leader last month, but that's fallen to fourth with only 1.4% growth for the month. Darwin negative, and Perth very, very flat. So it still is 11.7 is the annualised growth rate for all capital cities. So enormous upward pressure, a little bit driven by lack of stock, particularly in Melbourne and Sydney, and the other capital cities are a bit flatter. Well, they've got a much better balance of stock versus number of buyers, and so there's not as much upward pressure and not as much auction markets as Melbourne and Sydney are. The Reserve Bank Governor, Phil Lowe, has indicated that the RBA would consider lowering interest rates if it wasn't for a real prospect of fueling the overheated property market. Now, the inflation rate is low. It's outside the low range of the band that the RBA sets, and we are not at full employment, and both of those are two of the major guidelines as to where interest rates should go. But for a long time they've been flat, and it looks like for a long time going forward they will remain flat as well. In America, we see that they're prospectively going to lift interest rates next year, and that won't have too much to do with us except possibly lower the Australian dollar, which is also one of the targets of the RBA. Let's have a look at housing finance, and we have a look at owner-occupier loans. And in June of 2012, which is where it was seen that the property cycle started to take off, we see the debt in New South Wales was just over $4 billion and $3.9 billion in Victoria. Now, in December of 2016, that owner-occupier debt has gone to $7.7 billion in gross amount in New South Wales and $6 billion in Victoria. So in a space of just over 4 years, it's near on doubled, and that is something to watch out for, and no doubt one of the concerns of the RBA in their consideration of whether to keep interest rates plateaued or consider dropping them. On screen you'll now see all of the suburbs where Brad Teal real estate offices work in, and you'll note that there are more suburbs than normal because we had someone call up and actually say, my suburb never gets mentioned, but we work on where the main epicentre of the marketplaces are and where our offices are. But you'll see Moonee Ponds, enormous growth, Essendon still solid, the Sunbury area, which includes Diggers Rest and Riddles Creek and Bulla, that's a generalised area as well, and Brunswick is way over $1 million now. You recall last year I said at $850, I think it was, it wouldn't be long before it would be $1 million medium price suburb. Brunswick includes East Brunswick, Central Brunswick and West Brunswick as well. So they give you a bit of a trend about there is still upward pressure, and the 11.7 percent growth that was referred to earlier is true, and it's reflected in that upward pressure on medium prices. So we hope you've got a fair bit out of this month's update, and there's lots of numbers in all of that, and if you go over it you'll see upward pressure in property prices, consistently flat interest rate environment, and we look at the medium price where just all of the suburbs that we work in on this side of the CBD are very, very strong. There'll be a rental wrap video come out very soon with information about, once again, consistently letting properties before they become vacant, and multiple applications getting, wow, huge numbers that open for inspections and lots of applications. So it's a bit of a great time to be a landlord because you can have choice, and generally speaking, inflation in your rent, not a lot, but $600 might become $630 or $40 a week, $320 might become $350, and it all adds up and takes pressure off the expense side of owning a property. So thank you for watching our March 2017 video.